This is Nightly Business Report with Sue Herrera and Bill Griffin.
Stocks slip. Investors across the globe run from risky assets on concerns of financial instability in Turkey could spread to other markets.
Retail revival. Major stores report their earnings this week, and the results could prove that the death of that sector has been greatly exaggerated.
Cashing out. Is your 401k leaking? It may sound odd, but it's a serious problem that could put your retirement at risk. Those stories and much more tonight on Nightly Business Report for Monday, August the 13th.
Good evening, everyone, and welcome. Well, stocks start the new week where they left the last one, with declines. Investors are concerned about the financial crisis in Turkey that sent its currency tumbling on Friday. That worry spilled into markets around the globe and dampened enthusiasm for stocks worldwide. Here at home, the Dow Jones Industrial Average dropped 125 points to 25,187, marking a four-day losing streak. The Nasdaq fell 19 and the S&P 500 was down 11. But Turkey is trying to take action to stem the financial fallout and reassure investors about the country's fiscal condition. Willem Marks reports tonight for us from Istanbul.
President Erdogan doubled down on his blame game today after a weekend spent railing against foreign powers and the economic war they've launched against Turkey as the lira continued to hover around new lows against the US dollar. This morning, the country's central bank promised to support local banks with as much liquidity as they needed, but it stopped short of raising interest rates to combat inflation and support the currency as many investors had hoped. The country's Interior Ministry, meanwhile, vowed to investigate more than 300 social media accounts it said were responsible for talking down the lira. And in a speech to a group of Turkish ambassadors at the presidential palace in Ankara, Erdogan accused economic terrorists of plotting to harm Turkey by spreading false reports that the authorities would seize foreign currency deposits and impose capital controls to combat the currency slump. Those were just rumors, he insisted. The new finance minister, Berat al-Barak, meanwhile, had promised to roll out a new economic plan this morning. But his father-in-law, President Erdogan, who's philosophically opposed to interest rate increases and has publicly criticized them, simply promised to speed up government infrastructure spending. The dispute, of course, with Washington, D.C. over the continued detention of American pastor Andrew Brunson has also exacerbated the situation here, and that's prompted President Trump to announce higher tariffs on steel and aluminium back on Friday. Brunson's lawyer told us earlier this afternoon there had been no change in his client's situation and he still remained under house arrest. For Nightly Business Report, I'm Willem Marks in Istanbul.
The fear, of course, is that Turkey's economic turmoil will spread, and that fear has been sending money into safer assets like U.S. Treasuries. But how concerned should investors be? Steve Leisman takes a look.
Like the spread of the common cold, financial contagion can jump from country to country, targeting the weak at first, but also sometimes hitting the healthy. The question of contagion is now top of the mind of markets with the decline of the Turkish lira by almost 40% against the dollar in the past several days. Sparked by U.S. tariffs levied on Istanbul for holding an American pastor, the Turkish crisis has exposed a country with a punishing level of foreign debt, double-digit inflation, and a president who doesn't believe in an independent central bank. It may sound all limited to Turkey, but Federal Reserve rate hikes have strengthened the dollar and weakened currencies in a host of countries. U.S. tariffs have raised questions about their economic growth outlooks.
It's not just Turkey. You have just a massive external debt load among a whole array of emerging market countries. You can point to South Africa, you can point to Brazil, point to Mexico. There's a whole bunch of them out there, of course, including Russia as well. And I think that's the underlying problem. Is the massive amount of debt.
The U.S. is even feeling the effects already, with stocks down modestly and interest rates lower as investors clamor for safe U.S. assets. But the effects have been moderate and nothing like what happened in the 2008 financial crisis or even the 1998 currency crisis, at least so far. One big difference, there's a very different U.S. president now.
One of the strategies of this administration, in some regard, is to create enough stress abroad that they have to come and negotiate a settlement on the trade negotiations. And I think I got to believe that's part of their strategy, is put enough pain on China, put enough pain on other parts of the world that they bring them to the negotiation table in a favorable way for the United States.
The president has said that strong U.S. growth gives him latitude to pressure other countries for concessions. But that strategy assumes the U.S. doesn't catch cold from the rest of the world. For Nightly Business Report, I'm Steve Leisman.
OPEC's oil production rose slightly in July, even as Saudi Arabian output declined. In its monthly report, the cartel says the increase was driven by Kuwait, Nigeria, the United Arab Emirates, and Iraq. OPEC also revised lower its estimate for oil demand growth next year. That sent the price of domestic crude lower to settle at about $67 a barrel.
The retail sector will be in focus this week. Industry leaders like Home Depot, Macy's, and Walmart will be reporting their latest earnings, along with Coach, parent Tapestry, JCPenney, and Nordstrom. Charlie O'Shea joins us now to talk about the outlook for these results. He's lead retail analyst at Moody's. Charlie, good to see you again. Welcome back.
Good to see you, Bill.
Overall, this has been a very strong earnings reporting season. Do you expect the retailers to continue that trend?
Yeah, I think so. I think when you're looking at Walmart, for instance, and that's one of the highlight names, I think, this week, and as it is every quarter, I think Walmart provides a real window to the soul for the U.S. consumer. And I think in that vein, Walmart's been investing heavily, trying to get the food business just humming on all cylinders, and it's pretty close right now. So I think that'll give us a real idea of how the consumer is feeling and give us a pretty good backdrop going into the second half of the season, back to school and holiday this year.
What about some of the department stores, Macy's and JCPenney?
Sue, I think they're all going down the same path. They're all trying to lean up their inventories so margins will be better. They're trying to get their online businesses humming along and integrate the online business with the brick and mortar business. And throughout that segment, we're seeing varying degrees of success. And I think this quarter's earnings results will give us a real litmus test as to how well these guys are doing.
Home Depot's the first big one to report. That's tomorrow morning. The housing market has been pretty hot here. Will that be reflected in their report, do you think?
I think so. Home Depot's been one of the real highlights. Home Depot's online business is really good. Its pro business is running on all cylinders. I think Home Depot will be one of the real highlights this quarter.
What about the issue of tariffs? Some of them have been imposed, some of them are still in the works. Will we see any of that, do you think, reflected in any of these reports? Who are the most likely to be affected by those?
I think it's too early. I cover the auto retailers, for instance, and I don't want to get too off topic here, but one of our premises there is that with the variety of brands they sell in the used business, they should weather this pretty well. On the retail side, I think if you're a savvy retailer, you've been around for a while, you saw the Hanjin bankruptcy, you've seen dock strikes, you've seen all sorts of things happen over the last several years. You've beefed up your supply chain so that any impact is likely to be muted. However, if you are 100% sourcing in China, you're going to have some problems.
Charles, always good to see you. Thanks for joining us tonight. Appreciate it.
Good seeing you. Thanks very much.
Charlie O'Shea with Moody's. And a little bit later in the program here, we'll be taking a closer look at the health of the consumer, what we're spending on our money, or with our money, and how that could impact the economy coming up. Sue?
Bill, shares of Bayer, the owner of the weed killer Roundup, fell sharply today. This follows a legal ruling late Friday that the widely used product presented a, quote, substantial danger to consumers. The stock tumbled 10% in overseas trading. Aditi Roy has the details of the California court's decision.
Was the Roundup Pro or Ranger Pro design a substantial factor in causing harm to Mr. Johnson? Answer, yes.
It was a landmark ruling in a San Francisco courtroom Friday. A jury ordered agrochemical giant Monsanto to pay $289 million in damages to Dwayne Lee Johnson, a Northern California man who says his terminal cancer was caused by spraying the weed killer Roundup while working as a school groundskeeper. It is the first of thousands of cases across the country involving the Monsanto-made weed killer to go to trial, making some wonder if it will set a precedent. Johnson hopes it does.
And that's global, so that's bigger than me, way bigger than me. So I hope that that light will be shined.
The news sent shares of Bayer, which acquired Monsanto in June, lower. The case is just the latest development in an ongoing controversy over glyphosate, the active ingredient in Roundup, which is one of the most widely used weed killers on store shelves today. The chemical first came under fire in 2015, when an agency under the World Health Organization said the chemical was probably carcinogenic. Monsanto vigorously denies that claim. A company spokesman spoke to reporters after the verdict.
The verdict today does not change the science.
The company says more than 800 scientific studies and reviews and conclusions by the U.S. EPA, the U.S. Institutes of Health, and regulatory authorities around the world support the fact that glyphosate does not cause cancer. Still, Johnson hopes this case sends a powerful message.
If you know you're going to die, you might as well not die in vain. You might as well say to yourself, well, let's put this out here, what happened to me.
Monsanto says it will appeal. Meantime, the next case involving Roundup is scheduled to go to trial this fall in St. Louis. There's also a federal case involving hundreds of plaintiffs that was given the green light to go to trial. No date has been scheduled for that case at this time. For Nightly Business Report, I'm Aditi Roy, San Francisco.
Time to take a look at some of today's upgrades and downgrades, and we begin tonight with Papa John's, which was upgraded to buy from neutral at Longbow Research. The analyst there says it can only get better from here following the recent controversial departure of Papa John's founder. Price target now $52. That stock rose more than 3% today to $41.81. Dish was downgraded to sell from neutral at Moffett-Nathanson. The analyst there cites the uncertain outlook for that company's frequency spectrum holdings, which he says has gotten worse. Price target is now $29, and the stock was down 0.5% to $34.99.
Akamai was downgraded to neutral from outperform at Credit Suisse. The analyst says increased competition will make revenue growth more difficult next year. The price target is $84. The stock is trading below that level at 72 even after falling 3.5% today. Dollar Tree was upgraded to overweight from neutral at Atlantic Equities. The analyst there cites an inflection in sentiment regarding the discount retailer. The price target is $110. The stock rose fractionally to $92.97.
Still ahead, how will Harley-Davidson handle being a target of the president? Well, we'll soon find out.
The National Retail Federation expects retail sales to be even stronger than first thought. Spending is now expected to climb at least 4.5% this year. That's up slightly from the previous estimate. The trade organization cites tax reform and other upbeat economic indicators for that new forecast.
Younger generations seem to have no problem spending these days. According to a new survey from Charles Schwab, the so-called Generation Z, those are the ones that be aged 16 to 20, they've racked up an average of more than $4,000 in debt. But the survey also shows young millennials aged 21 to 25, they have an average of more than $11,000 in debt, but that includes student loans as well as credit card debt. Now, despite their high debt levels, Schwab says the survey also shows these two groups are optimistic about their financial futures.
So what does all of that data tell us about the health of consumer spending? Ethan Harris is the co-head of global economics research at Bank of America Merrill Lynch. He's here to share his thoughts on that. Good to see you, Ethan, as always. And you seem to think that the consumer is pretty healthy right now.
Yeah, I think so. We've had a 9-year recovery now. We've seen the unemployment rate drop to levels we haven't seen in 20 years. Wages are starting to grow. And one of the really important things is that after the big financial crisis, we had a collapse in the value of people's wealth. That is now completely recovered. We're now at record levels of net worth as a share of income. So the household sector is actually in quite good health right now.
Savings are going up, but debt levels also, as we just cited here. Is that a generational thing? What are you seeing there?
You know, when I look at that, I look at it more as it shows you how tough it is for that generation. Education costs have skyrocketed, and so a lot of that student loan debt is not irresponsible spending. It's just people need to take out the loans to cover their bills.
And those are young folks who grew up during the financial crisis. How does that affect them, do you think?
Well, I think a lot of economists, including myself, would argue that this, in some ways, this generation is kind of like the Great Depression generation. Right. These are people who know what it's like to be in a really bad economy, to come out of college and suddenly have all your job opportunities disappear. And so I think they're a pretty conservative generation. One of the things we do is we have a regular survey of consumers we find that millennials have a much stronger tendency to save the tax cut than older people. And that, I think, is a reflection of this idea that, you know, it can get dangerous out there.
Yes.
But longer term, that could be healthier.
It is healthier. I think one of the things that's good in the latest data, including the revisions they've done to the data, is the saving rate's much higher than we previously thought. That's a sign that people have moved into a stronger position, they've recovered their wealth, and so they can spend going forward.
All right, Ethan, always great to see you. Thanks so much for joining us. Ethan Harris, Bank of America Merrill Lynch.
The CFO of one of this year's best performing stocks is stepping down. And that's where we begin tonight's Market Focus. David Wells has been Netflix Chief Financial Officer since 2010. He's a real veteran with this company. He's been there a total of 14 years. And he says that he will stay on until a successor is found. And then he plans to focus on philanthropy when he leaves the company. The stock fell 1% today to $341.31. Meanwhile, activist investor Elliott Management has taken a big stake in the TV ratings company Nielsen. According to the Wall Street Journal, the hedge fund plans to push Nielsen to sell itself. Nielsen says it welcomes the views of its shareholders, including Elliott. The stock popped by 12% today on that news to $24.62. Dycom has slashed its second quarter profit and sales outlook. The contracting services company cited slower than expected large-scale deployments, and this is the second disappointing outlook issued by the company, which already cut its first full-year guidance back in May. The stock down 24% today to $68.09.
The maker of ATM machines is reportedly looking to sell itself. According to CNBC, Diebold Nixdorf has hired Credit Suisse and Evercore to help find potential buyers. The talks are not in the advanced stages and no deal is assured. Nonetheless, shares of the small cap stock soared 16% to $4.60. Regeneron's request for expanded approval of its eye drug was delayed by the FDA. The biotech will continue discussions with the regulator and will wait 2 months for a final decision. One analyst says that delay could put Regeneron at a disadvantage versus its competitors. The stock fell a fraction to $366.45. And Tesla's CEO says his claim last week that funding had been secured to take the company private was based on repeated conversations with the Saudis. In a blog post today, Elon Musk said the Saudi Arabian Sovereign Wealth Fund approached him multiple times about that issue. After a July 31st meeting, Musk said he thought a deal could be closed. In a volatile session, the stock closed higher to $356.41.
And from electric cars to an iconic American motorcycle company, Harley-Davidson is now being targeted by President Trump again. He said over the weekend in a tweet that he supported a boycott of the bike maker. That sent shares of Harley lower today, extending its recent slide. Morgan Brennan has more on this escalating feud.
What happens when the President of the United States supports the boycott of an American brand? Harley-Davidson may soon find out. After hosting a Bikers for Trump event at his New Jersey golf course over the weekend, President Trump once again took to Twitter to slam the company, saying, quote, many Harley-Davidson owners plan to boycott the company if manufacturing moves overseas. Great. Most other companies are coming in our direction, including Harley competitors. A really bad move. The U.S. will soon have a level playing field, or better. It's the latest salvo in a war of words and tariffs that has found Harley at the center of a bigger policy debate. A debate CEO Matt Levatich commented on several weeks ago in response to the president's anger over Harley's decision to move some production overseas.
I think as a business, we just deal with what we have to deal with. And we are not a political organization. We've worked very hard to be apolitical in how we approach our business and our consumers everywhere in the world. So we do what we have to do to maintain that integrity as a company and as a brand. Facing difficult decisions as we had in this case, And that was just an unfortunate, attention around a set of decisions that we made that were rational under the circumstances.
Harley said it would shift some manufacturing to counter higher tariffs in Europe, but maintains motorcycles sold in the U.S. will continue to be made in the U.S. As for whether presidential comments and now prospective boycott are affecting sales, a number of Harley dealerships, whether in North Jersey, Kansas City, the Chicago area, or Dallas, say so far they haven't seen it, at least not yet. Managers say they're educating customers on misinformation, and as one store manager quipped, Trump's been there 2 years, we've been here 115. Still, investors are worried, and that did drive Harley shares lower today. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
And from motorcycles to planes, tonight federal investigators are going over voice and data recorders from a stolen Alaska Airlines plane that crashed after a wild and scary joyride Friday night. And as Phil LeBeau reports, the incident raises some tough questions about airline security.
Try to do a barrel roll, and if that goes good, now I'm just going to nose down and call it a night.
It's the question everyone is asking. How did 29-year-old Richard Russell, a ramp service worker who is not a licensed pilot, get into an Alaska Airlines turboprop, start it up, and take off for a 1-hour joyride that included steering the empty passenger plane through a huge loop over the Puget Sound?
I got a lot of people that care about me, and it's going to disappoint them to hear that I did this.
We were just sitting watching the sunset, and there was a plane that was about to hit the water, and my cousins and I were like, whoa, that's crazy.
The fiery crash in a wooded area killed Russell, but it left a trail of questions. The biggest, how secure are planes parked on the tarmac? And how can airlines make sure only pilots are able to get into the cockpit and start up a plane?
The biggest red flag is that this is something that aviation security is not designed to prevent.
That is likely to change now that the FBI, NTSB, and FAA are all taking a long, hard look at airport and airplane security. With airports busier than ever adding more flights, federal regulators want to make sure safety is not being overlooked. Phil LeBeau, Nightly Business Report, Chicago.
By the way, SeaTac and the Seattle Port Authority say they have added more security in cargo areas and terminals following that stolen plane incident.
Still ahead, rating your retirement, why more people are doing it, even though they shouldn't. Fax machines could be the next target of hackers. Researchers at Checkpoint Software warn that cyber criminals can exploit vulnerabilities in all-in-one printers. Hackers are able to take over a device by faxing lines of malicious code disguised as an image file. Millions of fax machines remain in use today. Bill?
Well, millions of Americans are saving for retirement thanks to automatic enrollment in their 401k plans. But new research shows that many auto-enrolled workers are treating those accounts like an ATM, withdrawing their long-term savings prematurely. Our senior personal correspondent, Sharon Epperson, has been sitting here waiting patiently to tell us more about the impact this could have on their financial future. Let's start with this automatic enrollment program. How does that work?
Well, about 70% of large employers right now are automatically enrolling their employees in a 401k. And basically that means that when you are hired, you automatically become part of that 401k plan unless you opt out. And the plan will specify a certain percentage of your pay that will be deducted every pay period. And then you can elect, if you choose to do so, to contribute a different amount.
Are they saving more as a result of being automatically enrolled?
Well, that's the issue. They're saving more, but not as much as they possibly could. A new study came out from TIAA Institute showing that a lot of workers are increasing their savings, but not by as much because they're doing something that is causing what they call 401k leakage. So the potential retirement savings that they could get with auto enrollment is 7% of their starting pay after about 8 years. But what also increases is the amount of outstanding loans and withdrawals they're taking from these 401ks. That increases by about 3%. So then the net effect is that their increase in retirement savings is only about 4 to 5%.
This has been a persistent problem since 401ks were introduced more than 30 years ago. It's so tempting to, withdraw money from that.
You'd think if you're getting that benefit of automatically being enrolled, you don't have to think about it. It's
Right.
on autopilot, that you wouldn't see this leakage. But yet we're still seeing people who have smaller balances. They're not rolling it over to an IRA or another company 401k. They're taking that money for themselves. That's a taxable event.
I was just going to say,
so then
aren't
you
there
have that
tax
tax
implications?
Yes, so you don't ever want to do that. That's how you can avoid the 401k leakage. Don't take that withdraw and not put it in a qualified account.
But there's nothing that can be done to try and keep them from doing this?
Well, the other thing is you need to really look at that loan amount. Sometimes there's a medical emergency, there's some type of high interest debt you want to pay off, and you really need that money from the 401k. You shouldn't do it though, by any stretch if you can help it. But if you do it, look at the plan requirements. Make sure you understand how much you can borrow and what the payment terms are going to be. And don't stop saving. That's what really messes folks up. They take the money out, they're not putting anything back in. And so, a quarter of people reduce their retirement savings when they take that loan out. And that's really the biggest problem.
As always, Sharon Epperson, thank you.
Sure, my pleasure.
And before we go, here's a look at the final numbers from Wall Street. The Dow dropped 125 points, marking a 4-day losing streak. The Nasdaq fell 19. The S&P 500 was down 11. And that'll do it for a Monday edition of Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.